leveraging our security services.
Good afternoon, everyone. Thank you, Kristen. As I introduced myself earlier, my name is Tom Demchak. I'm the DXC Banking and Capital Market Technologist. Just as a little background, I spent about 30+ years of my career in technology at the New York Stock Exchange, COO of technology. And I joined CSC, which is now DXC, about 4 years ago to build a capital market practice. About a year ago, I moved over to the banking segment to automate and optimize a lot of our core banking platforms. So raise a hand, who has heard of DXC before? That's always the first question that comes up. So DXC is actually the largest integrator in the world. It was formed 2.5 years ago with the merger of HP Enterprise Services, which is the old EDS, and Computer Science Corporation, CSC. This is just one little quick slide. We have about 138,000 people, over 6,000 clients. We actually have retooled a lot of our capabilities and staff to really focus on digital in the last 2 years. So we now have over 10,000 Agile and DevOps professionals. But one of the key things that we really focus on and differentiate to the marketplace is our partner ecosystem. We really stress our partner ecosystem. We are an integrator. We have partners that actually are competitors. And the way we categorize our partners, if you see on the right side, is strategic partners. We have about 16 to 18 strategic partners at the global corporate level, AWS being one of them. We actually have dedicated compliance folks, partner folks that manage the relationship. We also have solution partners, channel partners, and reseller partners. Overall, there's about 200+ partners that we use in all of our solutions, both on a horizontal solution basis and also in the vertical basis. One of my roles has really been also assessing what is out there in the fintech space and how we can integrate those solutions into our overall solution. Kristen touched on this a little, but we work with a lot of banks. We actually run a platform called Hogan. It's been around for about 40 years. About 40 to 50 banks around the world use it. The 6 of the top 10 banks in the US use it. And it's a very, very reliable system. It processes over 275 million accounts every day. $1 trillion worth of credit card transactions and so forth. And one of the things we're finding in talking to a lot of our clients is that they need to go to digital. We're working with about 18 banks today to modernize their current platform and go digital. And I'll talk a second about what that means. And some of the reasons they need to go digital is to take advantage of the fintech capabilities. A lot of these legacy platforms are not open, so you can't really integrate very readily fintechs. And it's not a matter of if you need to change, but rather how and when. And a lot of our banks and customers today realize that they have to innovate. Kristen covered some of this before, but what are we seeing from a competitive landscape standpoint with our current banking customers? There's neobank platforms that are evolving where there's 100% digital. They have the bank, but they're not the bank platform to fully run a bank in the cloud, but they're not a bank themselves. And then you have incumbent banks that are actually setting up digital banks in the cloud. And then last but not least, you have new challenger banks. I think Kristen mentioned Starling before it was on our slide, and a few other banks that are evolving. And so what we feel and what we're hearing from our clients and what we're helping them with and working with the fintechs is it's time to call to action. Cloud is becoming more and more acceptable. It's being adopted by the neobanks. As you just heard from Kristen, there's a higher level of comfort in the security and management of risk. In fact, I've talked within the last several months to the FFIEC, which is the oversight regulator from a technology standpoint for a lot of the governmental agencies that oversee these banks. And we have a couple initiatives, and we're going to talk about those use cases where we're running banks in the cloud now. And the regulator wanted to make sure that we're adhering to all the requirements. The main thing they're concerned about is the risk. Is the bank aware of the risk? And do you have the right mitigation strategies to deal with that risk? And So what we've done as one of our use cases is we've taken this proven hyper-efficient core that runs deposits, loans, cards, and we've digitalized it. We put it in the cloud. And what has enabled banks to do with our fintech community is really focus on the customer wallet and not really running the bank infrastructure anymore. It's being offered as a service, so it also provides a wonderful financial position for the bank because you don't have the large CapEx expenditure. It's based upon the number of accounts being processed. So it's a pay-as-you-go model. And it allows a lot of our banks to start competing with these challenger banks. This is, it might be a little difficult to see, but this is what we've brought to the marketplace. What you see in the middle there is the core, customer lending and deposits, and we also have our cards, which is going to be added onto this early next year. And with one of our digital partners, we've actually integrated an omni-channel digital front end. But what's more important about that partner, and this is where we leverage fintechs, is that they provide an API layer to talk to a lot of the interfaces needed to run a bank. Talk to ATM machines, talk to the Fed, talk to the payments, ACH. And then we've provided it fully as a service in the cloud. We are tightly coupled with AWS. And by the way, we also have a similar type of coupling with all the other cloud providers. And then you'll see to the right, and these are some of the fintechs that we actually have already been certified on our platform. So the way we bring this to the banking community, both our current clients, and we're also targeting in the US more of the down-tier banks. We're looking at banks with assets under management of $1.5 billion to $20 billion. It's about 630 banks in the US out of 10,800 that fit within the category. So we're targeting to bring this solution to those banks. And a bank can decide for us to bring along one of our fintech partners. We talked a lot about AML, and we talked about risk management, digital checking, or we can integrate with the API capability we have now in our core to existing capabilities that that particular bank has. So this is the use case that we're bringing to market, and we're building it off of a proven technology platform that's used around the world. And one of the challenges with a lot of these startup banking platforms that are running in the cloud is their scalability. They haven't really, a lot of them have not been proven that they can handle the transaction levels that a lot of these banks need today. I know we're running very quick on time here, so I'm going to have Bart just very quickly talk about one of our other use cases.
Hi, good afternoon. I'm Bart Bailey. I head up our lending product management here at DXC. Just a use case I want to talk about, and he mentioned we're moving Hogan to the cloud. The purpose of that really is to provide a SaaS model for lending and servicing. And we've been doing this for quite some time with our early resolution platform. So we're the leading default solution in the marketplace. It's a SaaS model, highly configurable. And really the main purpose to move from our private DXC cloud into Amazon is really to open up our partner ecosystem with the fintechs, accelerate innovation for our clients, as well as lower our costs, right? In addition, right, we want to be able to go into our emerging markets very quickly. And the traditional hardware model that we've had in the past, right, that's a 18-month to 24 endeavor, where in Amazon I can set that up in anywhere from 3 to 6 months. The other piece of this is the servicing model traditionally for loan servicing has not seen the innovation that the origination side has had. What's interesting is you come from a very highly digital experience today on the origination side. I just went through that personally recently, where you can authenticate your bank and do data aggregation. You've got e-closing and those types of things. And then you come on the servicing side and it's, oh, hey, fax me your pay stubs and your bank statements to do a modification, right? So we are pushing really that digital experience. We have a borrower portal where you can do authentication. We're adding that data aggregation piece, e-signature, e-delivery of their modification documents, and really pushing that kind of digital experience onto the servicing, because those especially millennials, right, are expecting that kind of digital experience throughout their life cycle, both from originations through their servicing experience. It also, one of our purposes of doing this too is to help drive down cost of loan servicing. Pre-crisis, loan servicing average on a defaulted mortgage anywhere from $500 to $600. Today it's up $2,500, and it's stayed there during the crisis and still there because we're in a highly regulated environment, and it's really automation through AI, those types of things, digital experience can help bring down those costs and really help drive better experience for the bank itself as well as that end consumer.
Thank you.
Thanks.
So what we wanted to do, in addition to sharing these use cases, is talk for a few minutes about how we actually implemented some of the things that Kristen talked about and making sure that we have a highly secure, resilient environment that the regulator is satisfied with. I think we all talked about the cloud benefits. Many of you, especially the fintech companies, realize what the cloud benefits are. So I'm not going to spend a lot of time on this particular slide. But when you look at running a bank in particular in the cloud, you need to make sure you have the right management infrastructure to support it. And what I mean by management infrastructure is you need to make sure that at the edge you have all the security needed. Internally within the environment you have all the proper security, so you make sure that, especially with the criticality of the data, all the data is encrypted both in flight and at rest. You also need to make sure that this particular VM can only talk to that VM. So all of this has to be built in. It has to be monitored, managed. And that's actually one of the big expertise that DXC brings along with what AWS brings. This is going to be a little difficult to see, but I just wanted to show an illustration. I mentioned that we've actually deployed a bank in the cloud just recently. And the way we've structured this is setting it up as a private instance within a public cloud. So through VPCs, virtual private clouds, the pointer is, you see a lot of segregation of the environment. And in particular, one of the things we did, oops, sorry. I'm looking for the pointer here. Oh, there we go. One of the things we did is, for example, over here, we have our partners. So all the partners that I showed on that previous chart in regards to our solution, they are actually completely segregated in a private VPC within the public cloud. Same thing with the management side. And then the core banking platform is all segregated. So when you look at designing solutions for banks or insurance companies or any bank that's highly regulated or any organization highly regulated, you need to make sure that you've got all the thought out potential points of where you might have issues and design it appropriately. So from securing the bank standpoint, I already mentioned that the regulator is going to require all data to be encrypted and at rest, penetration being done. In fact, one of the interesting things that came up in this particular bank that we've implemented is we're using an encryption by one of our third parties to handle the data in flight. One of the concerns was, would DXC's providing the managed services? Would DXC operations folks have access to the encryption keys because they have root access into the system? So we actually had to encrypt the encryption keys to put another level of security on it to please the regulators. You also have user and role-based authentication and entitlement. The entitlement side is very, very important to make sure that you have the right access for the various people. All the security and information event monitoring is provided real time. All the network layers are encrypted and secure. As Kristen was saying, there's a whole series of compliance that AWS provides. We also have DXC a optional biometrics capability for onboarding. So you don't need to use passwords anymore, and I know there was a presentation earlier. And then we also have a very large staff that supports security. So when you look at, besides the infrastructure layer at AWS, you also have to look at your full stack. and who's responsible for various aspects of the stack. And what we do with our clients is, depending upon what they want to pay for from a monitoring management perspective, we can manage the whole stack. The customer responsible for some of the middle layer of the stack in regards to defining what needs to talk to which system, and then you've got the Amazon layer. So this kind of gives you a feel for when you're looking at security and management of a critical application in the cloud, you need to understand all the components, who's got the roles and responsibilities of managing those components. And the main message that we give banks today is you shouldn't really worry about, running your infrastructure, managing your infrastructure. There's a lot of cost efficiencies by using the cloud and running things in the cloud, especially now that it's a lot more acceptable from a regulatory standpoint. In fact, I was at a presentation last week where one of the participants mentioned that they're not really seeing the TCO benefits of going to the cloud. So my response is, what are you looking at? Are just the hard dollars? Which is what they were looking at. But there's a lot of soft dollars. Soft dollar savings, when you add that in regards to how quickly you can provision, how quickly you can integrate fintechs and new capabilities into your solution, how quickly and nimble you are on release management and so forth. So when you do your TCO, you can't just look at the hard dollar savings that, yeah, I had X number of people in this infrastructure point in that application, now I'm put in the cloud and doing a one-to-one comparison. There's a lot of other benefits that are realized that you need to include when you look at why to go to cloud and the cost efficiencies. We've seen a lot of benefits that clients have from a cost efficiency standpoint. More importantly, leveraging fintechs in your solution, and DXC, we have a strong fintech ecosystem that we leverage. And as Kristen was saying, there's a marketplace out that AWS has that also banks go to find out what's out there from an AML perspective, KYC perspective. And today, you really can't, these companies today, including us, cannot just build their own. They need to leverage partners like fintechs.
Question, with your solution, can you give us an example of a client, because like today, U.S. Bank just announced they're laying off people in their branches because they're going more digital. Have you had clients in terms of the challenger banks? They don't need to be so staffed with thousands of people anymore, right? To be a challenger bank. Well, do you have any smaller clients? How many people do they employ typically using your product?
Yeah, so the most recent one is a bank in Oklahoma. This is public information. We've been actually presented to the American Banking Association with this bank. They have 16,000 clients today. They have a small IT organization, and they use a competitor core banking platform. And they were not very satisfied with the agility of that competitor. Plus, they wanted to, when they did the market analysis of what they wanted to do as a family-owned bank, they wanted to grow, because otherwise they would have been consumed by some other bank. So they have a strategy that in 2 years they're going to replace all their infrastructure. They've actually partnered with a social banking platform that's fully digital that brings clients to the bank. And this social banking platform actually works in each region of the world, and they align themselves with the fiduciary bank, and they provide the platform. So this bank in particular wants to grow from 16,000 to 300,000 clients. And we are providing all the managed services. I mentioned that front-end omnichannel Axiom. They're one of our critical partners. They're the ones that actually brought us into this arrangement with this bank. And we just went live with the first phase. So they're running their digital banking today in the cloud, while they're also supporting the current brick and mortar clients with their existing infrastructure. And then over time, they're going to move everything to digital. But they have a very small IT department, and we've provided them a very cost-effective solution for these small banks.
I think you talked about the segregation on public cloud and how you encrypt the data on the transportation layer, all that. But I didn't hear much about data governance or continuous compliance. How do you handle data on the cloud?
Well, there's a couple models that you can pursue, that we talk to clients about pursuing. For those clients that are very, very concerned about the PII data being in the cloud, we actually provide a hybrid model where you can have your PII data sitting on-prem, and you can have your processing done in the cloud. That was one example. I think I'm out of time, sorry. If anyone wants to talk afterwards, please talk to us.
All right, thank you very much for that presentation. I see a couple more people have been trickling in, which is great. So I think some people have been looking at the agenda a little bit, and we did switch the first and second session of the afternoon, so now we will move on to our keynote, which was supposed to be first after lunch, in case anybody's confused. So our next guest was ranked by LinkedIn as one of the top 5 CMOs in the world. Pretty impressive, if I say so myself. One of the top 5 CMOs in the world to follow for thought leadership in the